How you guys doing? Welcome back to Kaleb's Konnections. I've got a great one for you guys this week. Who am I with this week?
Hi, I'm Shannon Conaway, also known as Mortgage Lender Lady.
Ooh, Mortgage Lender Lady. How'd you come up with that name?
So, you know what's funny? I used to work in a call center and I had a bunch of New Jersey and New York leads that would come in.
Love the New Yorkers.
Yes. It was so funny to me because really it didn't matter what state they were in, but where it stuck out the most was when someone had an accent.
Yeah.
Oftentimes when I would call, I would get, "Hey Ma, this is the Mortgage Lender Lady," or like, "Hey, it's the Mortgage Lender Lady." That's always what they would call me.
Love it.
And so I just kind of got used to it and I was like, you know what, that is how people will remember me.
Yeah.
And it kind of has a ring to it. So I was like, that's appropriate. When I decided to jump out on my own, I was like, I'm going to be Mortgage Lender Lady.
So what's the Mortgage Lender Lady do?
What I do is I pre-qualify, pre-approve, and then pre-underwrite people's loans. Those are 3 different terms that most people don't know. They kind of lump them all in and think that they're the same thing when they are really not. So upon my initial phone call with someone, we will talk about what is possible for someone. But it's not until I actually have the paper trail, records of income, a credit pull. I would do a soft pull, but that's still pretty clear data that I can go off of for a pre-approval. And then your assets, which is essentially just money saved and set aside that hopefully you would put towards a down payment and your closing cost. And so that would be considered a pre-approval.
Okay.
And that's kind of the standard that someone's going to receive. They're going to get a pre-approval letter before they go out shopping to purchase a home. But added benefit of using my services is that I would pre-underwrite your loan. And so essentially what I'm doing is I'm not only getting that paper trail, but I'm also sending that into process before you even have a home picked out yet. So much of the trouble would be that you have the home picked out, you had the standard pre-approval, and then your loan still falls through because of a niche condition or a unique condition to your subject property that causes the deal to not work out.
We've seen that way too many times.
Right, and so that's one thing that I want to avoid that for everyone because time is money. And so I don't want to waste your time and our realtor partners who we love and value and support. We want to make sure that everything that we're doing is done with excellence. And so for me, if I can pre-underwrite it, I'm going to pre-underwrite it. It also puts you ahead of the curve when I go to call the listing agent, which for a listing agent is essentially someone who represents the seller of the home that you're looking to buy. A lot of people don't know this, but your lender does more than pre-approve you. They're part of a team. They're advocating for you to help you get the deal. And in the new year, assuming rates come down, that's kind of up in the air right now.
Big question.
But yeah, I'm like, we love how unreliable the Fed has been with what they say. So I'm just like, the Fed said it, I don't care anymore. Like, they can change their mind tomorrow. And that's what they've been doing for 2 years now. But anyway, they don't realize, some lenders are just pushing paper. They give you the pre-approval and they leave you alone. But a good lender is not just going to be giving you a pre-approval letter. They're wanting to make sure, if they care about you, they want to make sure that your largest investment is something that is going to support you for the next 3 to 5 years. Statistically, a person is going to be in the same loan or in the same home for 3 to 5 years. And so you want to make sure that the way that loan is set up for your client is that it aligns with their goals. If it doesn't align with their goals, then that's not the loan product they need to be in. And that's something that should be had on the upfront conversation. And I see too often people in my seat become afraid because they see that there's anxiety on the buyer side. Yeah. This is a huge amount of money to put forward. Again, like I said, it is your largest investment. They can get so fixated on a dollar amount that they lose sight of the integrity or the quality of the person that they're working with. So maybe they got the cheapest loan product, but maybe that product isn't actually in their best interest and isn't actually going to serve them for the next 3 to 5 years, which we all know when you choose the cheapest item, when you go to the store and you take it home and you use it and it breaks, or you realize it's not actually going to meet the need that you purchased it for, you have to do it again. And then it ends up being more costly.
Absolutely.
And so the thing that is important to me is that I do it right the first time and that there's clarity all along the way. But the other thing that we do, because we are a part of a team and we are there to advocate, I would call the listing agent, let them know when they do go to make an offer on this home, hey, this person is not just pre-approved, their loan has been pre-underwritten, which essentially makes their offer almost as good as cash. It's the next best thing to cash. Everybody loves a cash offer. That's the one they want to steal, right? I mean, that puts them first in line. And in the new year, right? If rates drop, we might start seeing more than one offer on a home.
Right, multiple offer situations.
And so what's really important is that you are prepared to compete, and you want a lender who is willing to put in the time and effort and knows your file like at the back of their hand in order to compete and advocate for you with that listing agent.
Awesome. So for someone that's not in your seat, what do you feel is a misconception that they see in the industry, or as you mentioned, as the Fed puts out there? Like, what's a misconception?
That's a really good question. I think one of the misconceptions would be that all lenders are money hungry or we're trying to screw you over. That's simply not the case. For one, there is a service that's being provided, and with the service being provided, there is a cost to that. And as I mentioned before, depending on the type of value you're receiving, that may very well be reflected in the cost of the product that's being offered. But loan officers are not robots with one motivation. We are humans and we care, right? And we have different motivations depending on the type of person we are. You know, you're gonna have good ones and you're gonna have bad ones. You want one that cares about the entire person, a person who has holistic concern in mind for you. For example, you know, I just had a buyer that I paid for their appraisal. You know, it was like $790. They ended up terminating their contract, and the reason that they did that is because it was like a flipped home that was really a flopped home. The person who did the contract work on it did the electrical work wrong, and it was going to create a fire hazard, and it was going to be $50,000 for them to replace that. Well, the seller's agent did not take the home off of Zillow, didn't say that we were under contract. I had the closing disclosure out. Like, the loan would have been ready to close. I mean, we terminated the contract. I said, hey, if you need to terminate this, like, I will send you your money back for this because this was not expected. And that's exactly what I did. And so, in fact, like, at present, I've essentially lost money on it. But there are good lenders who are good people and care about the person first. And so the way you choose your lender, in my opinion, really should be, I mean, they're managing your finances. You want to make sure that they are a decent, integrous, and credible person. And if they are coming with references, so if you don't know this person, you know, I would say they should come with a referral. And typically how someone hears about me is it's from a referral of one of my realtor partners. I don't work, the seller agent on that deal, I did not call her. I don't want her business. I don't want to work with her. I don't think that she does good business. So for me, money is not the most important. It's important, I need to feed my family. But what's most important is that we do right by people and that we partner with people who do right by people, because at the end of the day, that's all going to come back to you.
Love that. So the last question that we've got for you guys and for the people out there is, what's something you feel like people should know that they don't currently know about mortgage and about real estate?
I think there's a lot that they don't know. I mean, and that's why they trust an expert. But I would say one thing in particular, I mean, the Fed did say that they're going to drop interest rates a point. I would say one thing that is important for buyers to know is that it's not going to be immediately reflected in the interest rate of housing.
So you're telling me that when the Fed does something, it doesn't automatically happen same day?
It does, but it may not impact your housing because investors are already preparing for those changes. They're trying to eliminate dramatic impact, and they're trying to prepare financially for the changes that are about to occur and protect their investments as well. There's not always going to be a dramatic impact day of when it comes to housing, and the rates that are changing, when the Fed's dropping a rate, that's impacting credit cards, housing, food. I mean, it's impacting everything. It's the cost of money that's changing, but the way that it's impacted with housing in particular, it's not always going to be just because they dropped rates 1 point that we're going to go from a 7% rate to a 6% rate.
Okay.
That's something that's important for people to be aware of. And also, I think a lot of people aren't aware of that 3 or 4 years ago, when rates were 2s, 3s, 4s.
The golden times.
That was a historical anomaly. And so we're not going to see that again. Probably for another 30 years if it ever happens again. I mean, that happened during a global pandemic. Lord willing, we won't have a global pandemic like that. We're not going to see the same reaction in the market as a result. What they also don't know is that 75% of the United States refinanced their homes during that time. So there is a generational gap from those who have homes and have equity to those who are coming in to the market, and the stories that have been passed down to them are, in fact, there's a story being communicated that there is a lower rate that's available to them, that might be attainable to them, and in reality it might actually be what's holding them back from building equity. I don't say might be, it is holding them back from building equity. And so I actually think that, unfortunately, it's a dangerous narrative that's being passed on, and it's going to hinder people from building wealth. And so it's important that they recognize there is an opportunity cost there. Homes appreciate by 5% a year. So if you're going to wait to buy your $600,000 home as a first-time home buyer in Dallas and wait 5 years until you can save up X amount of dollars. You know, in 5 years, that's $150,000, $60,000 homes against $750,000.
Yeah.
That's crazy. That's absolutely crazy.
It's definitely it.
You'd want to lock in that purchase price at $600,000 at a higher rate. Stay in the home for 5 years, you have $150,000 in your pocket.
Yeah.
You need to talk to a trusted mortgage advisor who is ethical and trustworthy. That way they can just lay out the facts for you, because it's so obvious when you have the facts in front of you. It's just so obvious.
Yeah. Well,
And
if you guys are someone that wants to connect with someone, definitely get in touch with us so I can get you with Shannon.
yay! Thank you so much for your time.
Thank you. I appreciate having you.
Yeah.